At 7 seconds to go. Well, the new Samvat year has started. Yesterday was a good handover, and today it could be a flat day of trade. I expect volumes not to be unusually, high today, even though it's the first day, largely because of it's Monday morning, and then tomorrow is a holiday. So breadth also even Steven. Even though globally, everybody was talking about the Moody's impact, but that is just not getting captured right now. The breadth is literally all over the place. I guess whatever we gained yesterday, markets may just lose it today, and things may equalize when it comes to yesterday's, Murat session. The green on the screen, well, crude interplays, so it could be BPCL, HPCL, and it really could be Interglobe Aviation. No, not too many newsmakers, with the exception of iShare, Biocon, Hindalco, some prominent numbers were there. The breadth is very lukewarm. The market volumes are not great. The small cap index is down. So it's almost like whatever we saw yesterday in terms of excitement, in terms of the uptick, that is just getting completely, diminished, or it is just getting completely normalized. So that extra Sunday of 2 hours of Murat trading, whatever market gained, I think they're simply losing everything.
Yeah, we seem to have erased all the Murat trading gains. Let's just revisit what some of the earnings reactions have been like. Coal India, of course, was a very strong performance, came by over the weekend. The Q2 numbers are above estimates. Realization compression is well lower than expected. You had Sun TV as well, which was quite the dhamaka. The revenue uptick of 27%. Margins have now bloated all the way to 69.5%, almost a 0.5% uptick on Sun TV as well. Sale 2, the adjusted margins though are below estimates, but the volume growth has come in at 13%. So that's another story to look out for. Eicher Motors as well, the Q2 numbers above estimates. EBITDA has risen 32%, margin expansion of 200 basis points. There's Fortis as well, which came out with their numbers. Occupancy levels have risen on a sequential basis. There's Munjal Auto. The EBITDA has jumped up about 39.5%. And then, of course, there's Yes Bank as well. Not an earnings reaction, but they've got a 120 crore rupee amount from single trust in a security receipts portfolio. So look out for that as well. The earnings season has sure brought in its share of disappointments as well. So ONGC, wherein the Q2 numbers were below estimates, the windfall tax impacted realizations by $11 per barrel. That stock starts off lower by about 7/10. There's Glenmark as well, which is incurred a reported loss, and the exceptional loss stands at about almost touching 68 crore rupees. Glenmark down 2% this morning. Biocon also, the numbers are below estimates. Margins though have come in at 21.4% versus 20.3%. Tara Chemical, again the profit has slipped 27%. EBITDA down by 11%. For RCF, Alcargo, all disappointments there. And even for LIC, wherein the first half value of the new business is down 10%, and the APE also has slipped about 10.5% or so. So these are a couple of stocks which are in focus this morning. It's pretty a listless start. Naresh, pretty much what you already warned us of, that it's going to be a listless, low participation kind of week, with tomorrow already being a trading holiday.
So generally the next day post Diwali is lackluster, but given that we have one more holiday, expecting it to be much more boring relatively, we tend to fade off whatever has been done on Diwali day. So I think we have faded off quite a bit of it, and again we pause for the day.
Right. Yeah, Bala joins us. Let's connect with him. Bala, first, Happy New Year, Happy Diwali. Thank you for joining us. I thought we were the only ones working. All institutional investors were taking a day off. Birla AMC is working today?
Of course, yeah, working. First of all, Happy Diwali and Happy New Year to all the viewers.
Wish you the same.
Yeah, thank you.
So the officers come to work?
Of course, it's a skeleton stop today.
Go DIIs.
So I call it a skeleton stop.
Okay.
Because tomorrow is holiday, I'm sure people would have combined.
Yeah.
You don't get 4 consecutive Saturday, Sunday.
Yeah.
And 1 hour in between. So I'm sure people will take advantage of that. No
But
doubt.
I wonder why, and you should really do something about it. We need longer Diwali break.
I'm sure as the economy starts getting prospering, from a 5 days a week, it will come to 4 days. And the US, of course, they are giving these options for people. So I'm sure it's just a question of time. I think if you just go by what is being narrated by some of the senior
10
people
days
in the
ago,
country,
the digital
70 days.
The debate on social media was something else.
70 hours.
70
70
hours,
hours.
yeah.
That since there are 70 hours working, of course, Some of us have been working for more than 70 years all these years. But again, that's going to be the future as we move
So
forward.
what's the pledge for this year? How many hours you'll be working?
I continue to do the same. I think see, there is absolutely no replacement to the hard work that you have to do, and each year is a new year, and each year you have to do something different, and in order to ensure that you continue to drive upon the goal that you have, which is basically the building the business, building people, building the whole ecosystems, and whatever the hard work one has to do, I think my view has to, have to be done. There is absolutely no replacement. There is no substitute for hard work, which anyway you have to do.
But what do investors need to do differently for somewhat 2080?
So I think investors, I think continue to keep a focus on long term, given the fact that the country as a whole, I think we will be marching towards a $5 trillion economy and even beyond. And India will continue to remain one of the fastest growing economy in the world. And the world will look at India for the next 10 years as one of the most investment destination, whether it is a private equity or in public equity or in any other means in participating in the infrastructure building and so on and so forth. I think the world attention is going to be more on India in order to make it part of their global strategy. And therefore, there is absolutely no reason why Indian investors should look at short-term volatility basis which base their investment decisions. I think clearly the longer term seems to be pretty good. But this year, given the fact that I think the last few months have been pretty good for the market point of view, there has been a wider level participation that we have seen. The breadth and the width in the markets have been rising. In individual participations have been rising. Mutual funds have been getting a lot of money. And in general, various sectors, which is supposed to be the driver of the economy, I generally call it the engineering and science space. I think a lot of Indian companies have got a huge capability that my way is getting now unleashed. I think that we see it actually in the automobile sector. If you look at it, there are many auto parts companies that exist in the country. I think all of them are actually now coming in the demand more from the point of view of the products are now becoming more relevant and viability of them is also increasing. So that is being the case, I would assume the overall bullishness will stay. But having seen a significant rise in the market and also seen the interest rates being where they are today, definitely asset allocation will play a role. And so that's why I see this year investors' point of view. I don't just keep thinking that equity and asset class will continue to give the huge amount of return, but it will go through volatility, and some of the volatility could come from, we do not know where from it will come. Because my own experience has been that volatility, of course, comes in, and when the reversal happens, it doesn't tell you when it comes. It just comes for some unknown reasons, for which we do not know at this point of time what are those unknown reasons.
Do you expect this year to be a year of positive return for equities, or it could be a year of no return, low return, negative return?
I think this year we should probably see more of a flat kind of return, more than the negative return. Okay. And probably one should also not be surprised if there is a marginal negative return comes, given the fact that market has still not seen any kind of corrections anywhere in the market. Therefore, one should not be surprised. But again, my own belief is one should never measure the success of equity market on a one-year basis. I think we have to extend this argument beyond a 3-5 years period.
You know, we're talking about how it's going to be the next decade being the decade, and we have seen this digitization theme as well really play out. Do you think that it's going to be the traditional IT players, or a lot of these companies adopting AI, new age tech, etc., they will be the leaders?
I think clearly, I think from technology sector point of view, you have to divide them into pure service provider versus the product and solution provider. Definitely companies who are in the space of solution providing, whether using AI, ML or ChatGPT, or even engineering space, a lot of companies have been developing product, especially towards automobile sector. There are many companies that are emerging. They may be called as automobile companies. They may be a technology company within the auto space. Therefore, there are specialized companies within the each sectors focusing on technology, because technology is becoming actually the key for success everywhere. Therefore, that differentiation has to be done. At the same time, if the interest rates drops next year, which I think in the US, then there is a correlation of interest rates coming down. There's got direct correlation to the IT sector spending. If that actually comes back once again, the global market given the fact that spending by most of the companies towards building technology capability, including meeting with various regulatory requirement, I think that will continue to remain. So therefore, we'll have to just see, initially I think it will be more product driven and solution driven companies could drive the market, and as time progresses, the companies who are on the service side also should benefit, given the fact valuations are cheap, and second is last 3 years they are given a mediocre return, and balance sheets are strong, and the buyback can be used, and the deep cash that they have in the books could be used for the purpose of creating value for the shareholders. These are some of the moving parts also we have to keep in mind while taking a very strong views on the sector.
Sure. Where else do you see disruption and scope for higher growth generation in the year to come?
I think more than disruptions, I think financial service industry is the ultimate delivery to the end consumer. As we have seen in the last few years, the lending platforms have been picking up, it's been ensuring the common man is able to get his loan processed in a quick time frame. I think this is one area where I would probably see continuous innovations coming on the financial services side. And UP has been, I think, planning to go very aggressive in meeting the borrowing requirement of people who would probably borrow less than 2 lakh rupees. They're already thinking about rolling out a platform this year. That could also bring in some kind of regulations. Once that comes, naturally it could have some impact on some of those tech-driven platform from a disruption point of view. Though it's difficult to say that there is a belief that even disruptors can also get disrupted by way of new innovations. But those are some of the things, of course, you'll have to just see how it shapes up.
Bala, just to the point that you were earlier making, that asset allocation is going to be very, very important. Tell me what the pie for the next 1 year should look like, given the big, perhaps volatile event, which is the general elections.
I think the asset allocation should be a mix of equity and debt. Basically, multi-asset allocation fund could be one good choice, given the fact that invest in all the 3 or 4 asset classes, which includes equity, fixed income, gold and silver, and REIT and REIT as well. And second is fixed income carry has been pretty good. The way I look at fixed income, you may not get super duper return, but at the same time it gives you some kind of stability in the portfolio by way of acting as a cushion. And second is carry itself. And I mean, carry is the coupon is say 7.5%, you get a carry of 7.5%. Therefore, that's something also comes in the form of multi-asset allocation fund. There is one asset class one can choose is the multi-asset allocation fund.
Do you expect the SIP trend to continue, or could there be some caution ahead of elections?
No, SIP I think will continue. I think one should also keep in mind, while the gross volume in SIP has been rising, I think the 16,800 crores number is the gross number. Then naturally people are also coming in fresh and they will test the water by doing SIP for a short period. The more volatility sets in, there is also high probability some of those people who have come with the short-term expectations may also cancel. But there generally is about cancellation rates about 35 to 40%. That's what happened. I think the good news is the top line number keeps rising. As long as the top line number keeps rising, which in my view will remain, given the fact that most of the people now prefer to invest in SIP, including HNIs and the people who have got deep pocket, even they prefer to invest through the SIPs. Therefore, SIP investing will become actually the way of growth for the industry, I would presume.
Bala, everyone is saying like, look, there is a bubble. Some are saying trouble. Some are saying small cap stocks are, stretched. But then why are mutual funds accepting inflows? I mean, nobody stops from the amount, whether it is Nippon, whether it is Birla, whether it's HDFC, all mutual funds are gladly accepting mutual funds. Everybody came on a Diwali show and said that, look, small cap stocks are expensive, don't buy them. So then why are you accepting inflows?
So I think flow is a function of the asset allocation, right? I think everyone wants to have exposure to small and mid cap and comes with the 5-year period time horizon. So one other thing that we keep insisting that you invest in small cap, not an issue, but you come with the time frame of you are investing for 5-year period. If you come to the large cap, say assuming the 3-year period, if you can take, then small and mid cap has to be a longer period. Therefore, the money that comes for longer term, we cannot deny it. Second is we do not know whether the money is coming for short term or long term. That's second one. And third is from money manager's point of view, of course, they manage the liquidity. So whenever they feel actually the valuation is costly, or maybe there will be other issues such as liquidity, etc., or even finding company in the small cap space, there is a provision to invest in up to 35% in the large cap as well. Therefore, portfolio liquidity, it's also in some sense gets created by means of portfolio construction strategies. But at the same time, there are fund houses who have said that will take only maximum ticket size, SAP, only way of SAP taking. If SAP is the only way of investing actually in the market, then it doesn't serve the purpose of stopping the flows. But historically, my view is we should not stop the flows. I think the way it should do is money, of course, will continue to do their job in terms of the portfolio constructions. At the same time, investors have to realize I'm investing in small and mid cap not by looking at the past return. I'm looking at for building a portfolio constructions, even from investors' point of view, between large cap, mid cap, and small cap. He's also constructing the portfolio the way money is constructing the portfolio in the scheme that they manage or the invest. So that is the way investors have to look at it.
Good to have you. Thank you so much for joining in and wishing you, your team and family a happy Diwali.
Thank you.
Thank you so much.
All right, let's move right on then. And a corporate voice in the spotlight, Biocon Biologics. Let's understand the key growth drivers for the upcoming quarters. Shreyas Tambe is the CEO and Managing Director now joining us. Thanks so much for taking time out. To begin with, let's discuss your year-on-year growth and largely on the back of the Viatris acquisition. Sequentially, you've got the revenues which were flat. What's the reason for that and how is your core business shaping up? Because, what would be the growth ahead?
Yeah, and I think it's important to understand that, we are at a stage where we are still transitioning the business from Viatris over to Biocon Biologics. And if you look back at the quarter that went by, there was a substantial portion of licensing income that accrued into the P&L, and that was almost to the extent of 165, 170 crores. Now that was something that is of course not there this quarter. So it is always expected to be a one-off. It can come in a particular quarter and may not be. But despite that, you're already seeing that the business has grown and has been able to make up for that entire licensing income. So this quarter, if you see, all the product sales have really made up for any licensing income that we had seen in the past. We'd also had a situation that we were working off legacy contracts from Viatris in the past, which had higher rebates, which continuing with those rebates would have meant that we would have further eroded margins, further eroded revenues. And that's something the team's been able to work with in the US. And not only have we been able to retrieve that business, but it's resulted in a higher market share. So we've almost not just grown the market share, we've led many of these products overall. So in the US, all three products have gained market share over last year. So if you look at that part, but even sequentially over last quarter, we are starting to see growth even in Europe.
Right. Shreyas, your Q2 and, when it really comes to your quarterly performance, should one now then expect this kind of performance to sustain as we head into second half of the year, or you think there is an expectation of further improvement?
One of the key things that's happened over the course of the quarter that's just gone by is we've taken control of the business in North America and in over 70 countries in emerging markets. So what you're seeing partly is because of these transitions coming over and Biocon Biologics now in the driver's seat for over 50% of the business that we acquired from Viatris. I think you're starting to see that coming into Biocon Biologics P&L. And you're also seeing that despite that transition, you're able to see the performance in the mid-30s in the core EBITDA and the EBITDA being at the mid-20s, which is a healthy sign, and we expect that to continue in the coming quarters.
When do you expect to complete the trials of, be it Sumpamp and other drugs where the competitive intensity high? And assuming that if you're able to capture market share, what could be the upside?
Yeah, and I think this is an excellent question in terms of the pipeline, which our chairperson has always referred to as our lifeline. So we prided ourselves on science and R&D, and We've got one of the most robust, deepest pipelines in the industry. What's really coming off in the next few years, and I would refer to another product in addition to ustekinumab and denosumab, is aflibercept. And aflibercept is a product where we have first to file status, which has now been approved in the EU, and we're also gaining approval in other geographies, including in Canada. So we are seeing this as a massive opportunity. That in itself is over $10 billion in global sales. We're also seeing opportunity in ustekinumab, which we had said we will look to file by the end of this year, and I'm happy to report that that's tracking to plan. We should be in a position to file before the end of the year. Denosumab is another great asset that we are developing, and that's also on track to file before the end of next year, as we've said before.
So how is the pricing pressure in biosimilars in the US? Because we understand that the price erosion as of now shows no signs of slowing down.
Yeah, and I think one of the key questions in all these pricing will always be an outcome of competition. And as competition grows and as regulation clears up, you will see pricing be dominant as things progress. And that's where I think we've taken a very strategic position in terms of being a fully integrated player, where we have control over all the three key levers that allows the company to stay competitive, which is developing its own portfolio, manufacturing its own products, and then also having a commercial engine which can bring these products to market. So I think we're in a very strong position, and we've seen erosion in certain products where price erosion can be as steep as 70-75%, and some others where you see limited competition, particularly biosimilars in the oncology space have not seen a very sharp competition in terms of the price erosion. We've seen that erode to about over 50-60%.
We seem to be getting a bit of an audio issue there, but let's just move on, and we'd like to discuss with him, of course, Viatris's North America integration as well, which seems to be done, Shreyas. But what about Europe and the rest of the world? What's the timeline looking like?
Yeah, and I think this is a very key development overall in Biocon Biologics' journey. When we did this transaction and we completed that in November of last year, we had signed a 2-year transaction or transition services agreement, a TSA, with Viatris, because many of the markets that we've acquired, we have no presence, no infrastructure, no personnel, no commercial infrastructure in these countries. What's happened over the course
We seem to be having a bit of an audio issue, but it's been good having you on board. Thank you so much for taking time out and joining in. All right, that's Biocon Biologics. You've got the stock that's under a bit of pressure. What's going on with the markets? Flat as ever. So 19,448 is where the index is currently at. Names like SBI Life, ONGC, ICICI Bank, Nestle India, they're a bit tempered. Eicher Motors, Hindalco, Sun Pharma, along with Coal India doing all the heavy lifting. Quick break right here on the show. Be right back with lots more.
Joy Chavla, Chief Executive Officer with Titan, joins us now to walk us through that, how Diwali has been for Titan and how essentially the consumer demand has been. So Joy, first, happy Diwali and thank you for joining us. Let's first understand that your understanding of Dhanteras. Was this year's Dhanteras better than last year? And if yes, then what was the exception this year?
Yeah, I think we should be able to see double-digit growths. I don't have an exact number that I can share with you, but certainly double-digit growths is something that we had both planned for and we are seeing so far. If it continues to be in the same vein, then yeah, sure, why not? It will be a double-digit growth.
So what is the outlook then? Because we have seen gold prices at their peak levels just a few weeks ago. Did that impact the demand for gold coins and for gold jewelry?
So naturally, people do get spooked with gold rate jumps, which are of such a higher order, because right through October, post the tensions in the Middle East, we saw gold rates jump up by close to 10%. So while, Navratri and Dashera was good, but still there was some degree of nervousness amongst customers, especially for bigger tickets, etc. So there were quite a few fence sitters. Luckily, in the last 8 days, gold rate stabilized and in fact came down in the last few days, moderated down. Even today, I think the gold rate is slightly lower than yesterday. So that was maybe about a 2-3% moderation downwards. That brought in a lot of fence sitters, because people got used to the new normal and a further moderation kind of helped. So I think that always helps. But you know what? One of the things that we did was we introduced gold rate protection kind of offer to customers right in the beginning of the festive season in October. So they could avail of the best of that day's rate or a rate at a later date whenever they hope to buy. And quite a few people registered.
So how footfall's shaping up in stores this festive season?
Yes, of course. I think the growths have been fueled both by higher footfalls and therefore buyers, as well as, and therefore, number of bills, etc. And of course, the price increase, because if you look at gold price between this year and last year, similar time period, there is about a 13-14% increase in gold price. So it's a combination of everything, both footfall and gold price, which has driven this double-digit growths that we are expecting to see.
Also, how's the demand in international market now?
So, internationally, our stores are new, barring a couple of stores which were opened last year. But I think even in those stores, we have seen very good growths from what I hear. I don't have the data, but I know that it was a very good Dhanteras Day for all our stores internationally, be it in the US as well as in UAE and in Singapore also we have recently opened. So I hear it was very good because some anecdotal responses I've seen on one of the groups. So I think it's been a very good Diwali across all markets.
So what is the preparation then when it comes to the wedding season? Are you already seeing some purchases? Are you expecting a strong bounty?
Yeah, this year, because of the Malmas and the delayed festive season, wedding season starts right after Diwali. So I think from 15 November onwards, we'll see wedding dates are there and purchases have started, yes. In between in October, when the prices went up, people did kind of wait and watch to see what's happening. But my sense is that we are going to see very good demand for weddings, especially since Q1, there was not so much of the wedding demand that we were expecting. So a lot of the wedding dates and wedding occasions have been bunched up in the second half. So in my mind, it's not just November, December, but it's all the way up to March. That I think the second half is going to see very good wedding demand. We are geared up for it. As they say that in tennis, you can never win the balls you don't take. So we are always preparing ourselves for growth. We have launched our collections, our campaigns are in place to roll out immediately after Diwali. And of course, gold exchange is one of the big levers there again. So there's a lot of action planned out for wedding. And you will see some exciting Riva campaigns and collections. We've already launched, by the way, the collection, which was the big draw for the year, which was an edit with Tarun Tailyani and Riva. And that, I think, is going to be the flagship range. But also many of the collections that we've launched during Diwali, the Dharohar collection, the Kakatiya collection for the Telugu community, Aishani in Bengal. So all of these are also going to see very, very good response because these are products which many brides would wear.
Right. Thank you so much for taking the time out and, highlighting how the festive season has been for you at Titan. We'll take a very quick break then on that note. Still a little bit soft. We've pretty much undone all of yesterday's gains. So that's where the index is right now. In fact, we're now down about almost 72 points, 19,450 on the index.
Thanks for staying on with us. So welcome back. And the market clearly closed Samvat 2079 in style, ringing in the new year with a very optimistic note. And we spoke to a whole host of market voices to decode what to expect in Samvat 2080. Listen in.
Really, digitization is essentially a very, very powerful phenomenon.
Yeah.
I mean, digitization, technology adoption. I think the Prime Minister himself has said that this decade is going to be India's decade.
Yeah.
We're going to see several businesses being built around technology. And so I clearly believe whether it is the consumer space, whether it's the financial space, the enterprise space, across the board, you're going to see many, many interesting business models evolve.
You like Zomato's business model?
I think it's a great business model. The biggest indicator is that today there is no third player. Nobody's even thinking about it. You look at any other space, everybody wants to get into this. This is one space when nobody wants to get in, or nobody's even talking about it, which means that there's something really, really strong, or what we call as moat, about this business. That what they have done for the last 10 years, nobody is confident of cracking the code. And that's what makes it so interesting.
It is India's decade to be, but the traditional techies have not done anything, barring a few KPIT or persistent. When will their time come?
I think their time is over.
Really?
I think the time
इंडिया
is
में
over.
किसी का टाइम ओवर नहीं होता है.
No, when I say over means
And
as
coming
investors.
from him who has always tracked
no,
IT.
no, and I'll tell you why.
Sure.
It's not that these companies are over. It's just that for investors,
Yeah.
They may not kind of give you the kind of returns that you're looking for, because the growth is not very high. The growth is low single digit. Okay, and I don't think that's going to change.
Yeah.
Even if you look at the last decade, when so much has happened in the world of technology, these companies, the large companies, the top 3-4 companies,
Sure.
have probably barely grown at 10% in terms of revenues over a 10-year period. That too in rupee terms. In an environment where probably the rupee has depreciated by 2-3%. So
Yeah.
the dollar growth has been 6-7%.
Yeah.
So maybe in amongst the top 4-5 names, if there is anybody who gets the AI part of it really right, and if that AI part of it is very meaningful for their revenues, which means that it rakes in billions of dollars of revenues, then only will it make an impact. $100, $200, $300 million of AI revenue will not make an impact.
Yeah.
That is the difference. Versus that, the smaller companies, if they get AI right, it can change their world.
Yeah.
It will be a game changer for
If you have to bet on one or two names, large cap, small cap, mid cap, SME, doesn't matter. What is a pure AI play? Because AI तो आ रहा है.
I don't think, Nikunj, we still have a pure AI play.
Okay.
We don't have, and at best, we would just still be a services play on AI, which means helping enterprises globally to adopt AI. So I haven't yet come across a pure AI play, but yes, a lot of companies are making noises. Some of them are making strides. Some of them have also announced investment plans in AI, but that's about it. But we still don't have a situation where a company is standing up and saying, okay, now 10% of my revenues is coming in from generative AI. That is something which we are yet to see. But yes, there are some companies which have made some very interesting noises in this space, and we need to watch out how these companies can take forward this, scale up, and make it a meaningful part of the business.
Other than banks, what will be the breakthrough sector this time?
I'm not too sure about the breakthrough part of it. I still think it's going to be the banks and the financials which have a strong part. Consumers might come back. When I say consumers, means consumer staples have been again under pressure for the last year or two. It's quite possible that if my hypothesis turns out to be true, which is we probably will see sobering inflation, that will leave consumers with more money. The consumer companies will have better margins because of lower input cost pressures. If all of that happens, then it's quite possible that consumer staples, which may not have done too well in the year gone by, probably the next one or 2 years, you might see them coming back.
You could look at me and we'll make it in 2 minutes. I'll put stocks which I know you won't. I don't know whether you still own them. Radico Khaitan, yes, no?
Oh, absolutely. I mean, continue to own it. Have been owning it for a while. Continue to own it. Still like it. Margins are expanding. Their premium portfolio is still growing at about 20% in volume terms. It's still long way to go.
Hitachi.
Still continue to own it. I still think the big opportunity is not yet played out. I mean, it's probably the best HVDC play.
Mahindra Holidays.
Still continue to own it.
Okay. Tata Elxsi.
Don't own it.
Not anymore.
But have found better plays, not as better companies, but I think as better ideas. I think Tata Elxsi now has got priced to perfection. We need to honestly also as investors be cognizant of that.
You own United Spirits, Radico Khaitan and Sula.
That's right.
Then you own Bikaji.
No, don't own Bika.
You sold it.
Own Pratap. So probably a collection of all the names that you mentioned.
Three.
But I still think the three, especially Radico, Sula, in the financials, I think Home First Financial.
It is the perfect bachelor pad.
तो कब लेना है आपको?
अरे पहले बैचलर तो बन जाने दीजिए. डिवोर्स की फाइल घूम रही है कोर्ट में. कुछ साल लगेंगे अभी.
इसलिए housing.com का हाउसिंग असिस्ट फॉर रेडी प्राइस मैच एंड वेरीफाइड बायर्स. housing.com. पोस्ट योर प्रॉपर्टी नाउ.
Back with the market, right here in ET now, down about 72 odd points for the index. Glenmark, Biocon, Coforge, Abbott India, most of these, of course, earnings reactions. And there's PVR Inox as well, which is lower by about 2% as we speak. But where are the big gains going to come in from in the year ahead as we step into a brand new Samvat today, Samvat 2080? Here it are from Ravi Dharamshi as well as Sunil Singhania.
Pharma can be now. See, there was a time where you could paint all the companies with the same brush. It was a rising tide. Now it is not the case. It is more a stock pickers sector, I would say. You can divide the sectors amongst US-focused generic players. Within that, oral solids players or specialized players like inhalers or biosimilars or specialty generics. Then there are domestic-focused companies like domestic branded generics or diagnostics, healthcare, which is hospitals. Those are broadly the segment. And then there is CDMO, which is the new and upcoming segment. So those are the segments within pharma. And what the area that we don't like is the US focused, generic formulation players focused on oral solids. If there is an injectable focused or an inhaler focused or biosimilar focused, that is a little bit more specialized. Or you pick, we have picked up 1-2 companies in the pharma space which are very, very, very specialized. You don't find those kind of, you cannot say it's the same healthcare space. A contrast media company, or if that be, like an API, fermentation-based API company. Those are very, very different. The drivers are very different from most of the other pharma companies. So we are looking for pockets of opportunities within pharma, but we are not trying to play the reversion to mean in the US-focused generic players.
So Ravi, I just want to bring this point out for our viewers, which is that we are talking about mega themes here. For example, whether it is EV or whether it is energy transition or whether it is, manufacturing. Some of these stocks have gone up 3-4x, but if you still feel that these are multi-year themes, those who own them, should they sell them? Because the obvious question is that the P multiples are north of 50-60. Now, this is a sector where growth is there, but the P multiples have also gone higher. So the temptation to book profit is obvious. So why should one not book profits in these stocks which have already run up and where P multiples are expensive?
No, I think this is the most difficult and the hardest part about wealth creation. So yes, you will not go broke taking profits, but at the same time, if you want to really create wealth, one has to develop the conviction beyond this. And anytime you have 10, 20, 30 bagger kind of a stock in your portfolio, it will go through its periods of expensive valuation and probably 2-3 years of period of where the wealth is not created. So living through that period is the most difficult thing, but at the same time, the most rewarding in the long run. So there will come a time where probably your cost of acquisition you'll end up getting as dividend. or the daily price movement of your cost of acquisition, is that big, that high difference. So I would say that don't focus on the current earnings based multiple. Focus on what is the size of opportunity and where are we in that cycle. If the cycle has just begun, then you should not be in a hurry to book out your profits. If you are getting anxious about the profits, book 10%, 20%, 30%, whatever that gives you the confidence to hold on to the longer term from here as well. And I think that is how you will be able to hold for a long period of time and enjoy the benefits of wealth creation. So I am strongly of the opinion that it is never the identifying the stock that makes you money. It is your sitting through the periods of turbulence and coming out on top in the larger trend that makes you the big wealth.
One thing which you have to remember is that we are a growing economy and we are an economy which is evolving. So we have many more sectors, many more companies which are coming up for listing and which are also growing faster. The other thing is these are entrepreneur-driven companies, So I think in a growing environment, these companies will tend to grow a little bit faster than the larger companies and the overall economy. And I think that is the reason why they tend to do much better. Yes, sporadically, there are companies which go into a over-exuberance kind of a zone. And from time to time, there is a correction which happens. It happened in 2017-18. It happened briefly in between also during Corona also when the market fell. Maybe these stocks fell more. But I think given the earnings trajectory and the fact that the earnings for these companies tend to grow slightly better or faster than the larger companies, I think there is merit in saying that for really long-term investors, who have a view of 3-5 years, these companies can give you better results, but with more volatility. But from an investor's perspective, I think to have a diversified portfolio is better because there might be phases of 2, 3, 6 months where some of the larger companies do well. The other thing is that, typically the domestic inflows, when they happen, I think the smaller companies or the broader markets do well, which has been the case last 2-3 years. If and when the foreign flows start to become positive, it is possible that large caps during that period might end up doing better. But I think we are constructive on the overall market, be it the large cap, mid cap or small cap.
So in terms of in portfolio positioning, Sunil, the template which you followed is 15-15-15. 15% growth, 15% return ratio and P of less than 15. So that 15-15-15 model, is it still at play in this kind of a market where nothing is available at 15?
No, it is difficult, but not impossible. And Nikunj, it is basically a visible sort of thing. So what we say is out of these 3, 2 should be present and 1 should be visible. So, a 15% sacrosanct ROC and ROE is something which allows us to ensure that we make less mistakes. A 15% growth is possible across so many companies. And, if you are able to dig a little bit deep and take, 3-4 years view, you are able to find stocks where even the valuations are in your favor. So it's not to say that every stock which we buy will have this, but at the portfolio level, we are still able to construct a portfolio where these are met. In fact, both our portfolio strategies, one is the all cap, which is a mix of large and mid cap, as well as the second, which is purely mid and small cap, even now have all these 3 present at the portfolio level.
Good evening. It's been quite a year. There have been a number of headlines that have dominated, very unfortunate incidents that have taken place across the globe. There's been a lot as well that we've spoken about when it comes to central bank action. What do you think is going to be the big headline, the big talking point? Do you think elections are going to be a dominant factor on the minds of investors while looking at the overall market?
No, obviously, it's a big event. It happens once in 5 years. So you have the state elections, which have already started. So the results should be out first week of December. I think those results are more or less known in the sense that, almost everyone predicts a close election. So I don't think the outcome of those elections is going to be anything dramatic unless there are big surprises. And in the 24 elections, I think markets are more or less factoring in a continuity. And there is no reason to believe that should not happen, at least as far as the trends which are visible at this point of time. But, one thing we should not forget is that this government has been in power for like 9 years and change. first 5 years went into a lot of stuff which needed to be done, which was cleaning the NPAs out of the banks. You had demon experimentation, you had GST and so on and so forth. The second 4 years and change which we have seen so far, half of it went into COVID. It's only in the last 2-3 years we have started to see the full force of economic push, so whether it is a 10 lakh crore spending on infrastructure, the PLI, the Make in India, defense, railways and so on and so forth. Our view is that the next 5 years can be really revolutionary, and that would be the phase where India from a $3.7 trillion economy can easily cross like $5.5 trillion economy, and that phase will be very exciting, and I think investors should look at that big picture, and definitely to answer your question, it's going to be a big headline.
Every time just before the beginning of the new year, Sunil Singhania gives his best Murat idea. And you cannot say India, you cannot say Abacus mutual funds. You have to be slightly more specific. It's Diwali time.
I think, Nikunj, I don't think I can give you stock ideas, but what I can tell you is that, you mentioned whether we'll have smiles next Diwali or not. I think last 20-25 years, whoever has been positive on India has had good health and created good wealth.
All right, let's get a move on then and take a look at the listing of the day, and that is Protein eGov Technologies. It's formerly NSDL e-governance infrastructure that has made its debut with about a 2.5% premium, and the issue price was about 792, open around 810, 813 is where it's at. And do remember that it had received a fairly decent response as well. You had the retail and the NII categories that were booked 8.9 and 31.6 times respectively. You had the QIB portion as well that was booked fairly decent, about 47 times. So that's the listing of the day. All right, time for chart busters then. What's trending on the charts? Let's connect with our technical analysts. We've got Naresh Mirani and Kunal Bothra right back on. So Naresh, what is it that's your chart buster idea for the day? What's the Fataka stock?
So that's a chart for Sun Pharma, a stock which has gained over the last few days a little bit. But if you look at the last 8 years, the stock actually topped out around this 1150 to 1200 mark. Back in 2015, it was one of the best movers back in 2012 to 2015. Went through a dip all the way from 1200 to 350, 400 levels, and now has finally come back to that 1150, 1200 mark. For the last 3 months also, the stock was consolidating around this 1080 to 1160 mark. So a short-term breakout done as well as on verge of a longer-term breakout. So could be a fresh trend for the stock. Expecting a target price of 1300 to 1500, stop loss at 1140.
Okay, let's find out what the next chartbuster idea is then. And Kunal, take us through your top chart of the day.
Well, it's on BHEL, Aman, and how the charts are poised at a very interesting juncture in terms of a breakout. So the near-term trends for BHEL was when the stock was going through a bit of a mild downtrend. It started off to get into a rally mode end of the month of July, start of August. From here on, the pace rallied or intensified. As you can see, the stock start to get into a breakout mode, and from here on, from levels of I think 100 to 140 approximately, the stock went through a very sharp uptrend. Now in this last 1 or 2 months, the stock has gone through a consolidation. It's heading towards a breakout of this consolidation. This is around 134-35 mark for BHEL. This also completes a potential inverted head and shoulder pattern for BHEL. So this could be a very interesting breakout. If the stock completes this level of a breakout and closes about this level, we would expect the stock to take out the level of 145 and even come back to levels of 150 over the very near term.
Right. And what about individual stock strategies?
So two buy calls. The first one is a buy on Sun TV. Would recommend that as a buy. Targets of 688, stop loss 650. And the second would be a buy on Federal Bank. A bit of a slow mover, but I think looks attractive for a breakout. Targets of 156, stop loss 147.
Okay, let's find out what are Naresh's top recommendations. Naresh, what are you picking out?
So first year buy on BHEL, the stock has given a breakout of the last few weeks. Stop loss at 130, target price of 150. Second is a buy on RBL Bank, a strong recovery from the lows, again setting up for a breakout. Stop loss at 238, target price of 260.
Okay, let's take a very quick break then on that note. But what's Diwali? We've had some lips packing treats, and we at ET now brought you one with a twist. Startup icons Vinita Singh of Sugar Cosmetics, Nitish Mittersen are here to battle it out in this special cookout edition with Awan being the judge.
Let's make pasta with red sauce.
Sure, ma'am.
That'll be interesting.
We can do that.
So we'll start. Is that like a competition? Because I'm very competitive. Out. So let's see who makes a better pasta dish. I think we can have the chef and us also sample and see. Oh my God.
Job.
So bring it on.
Yes, bring it on. Let's get started, chef.
We'll do some white pasta, I think.
Yeah, some white pasta.
I'm actually quite good at doing mobile games, cooking games. A lot of practice on that. So maybe I will win.
So he has a bit of an edge.
Yeah.
That'll help, but let's see. Maybe
So, ma'am, start with the...
adding sugar to it.
Yeah.
Good one, good one. So tell me what's a little bit more about your exercise routine.
Broccoli.
Oh yes, I love running. Though for the last 15 years, every year I've been doing the Mumbai Marathon. And of course, a lot of ultra marathons and triathlons. That's something I do for fun, not really just for fitness. Yeah, because I really enjoy it. I enjoy racing.
Okay, chef, now no helping, huh? Add your own. I had a setting with him.
Ma'am, you can add your sauces on your pasta.
Okay. So we add the sauce?
Yeah. Yes. Okay.
No, maybe Nitish, you go ahead and add the white sauce and you're adding the red. Yeah.
Oh, okay.
You're doing red sauce. And Nitish, what about you? What's the fitness routine like? Are you into fitness?
Oh yeah, absolutely. I think fitness is extremely important for me, but I really can't function without it.
Yeah.
So I think 3 or 4 times gym is important, but I picked up something really interesting during COVID. So I live in this tall apartment building.
Yeah.
And everything was locked down, right?
Yeah.
So I started running up the stairs.
Oh yeah, that's
So I try and
making use of what's I need sauce in my pasta.
So you run up and you come down by the elevator. Or you
correct. So I try and do once or twice a week, 100 floors walking up.
Floors?
Wow. Running, walking up.
One thing that maybe when you're down or you're upset or you've been traveling too much, you come back, you just found that comfort food. What would that be for you, Nilash?
I mean, I do have a sweet tooth, especially when I'm stressed out. It can be chocolate. But routine, I like your Indian Punjabi food, like Romali roti, copper chimney style.
And what about you?
I have rajma chawal after a stressful day. And that's my comfort food every night, whenever I'm stressed, especially.
Lot of help coming from the chef now.
So you want me to step back?
No, you can step in, but I also want them to
Okay, so ma'am, you can add all those seasoning. What is this? This is Parmesan. Parmesan.
Pepper, we've got basil, parsley, oregano, salt, and chili flakes, and I think garlic you've already added. So what would you like? Can I pass something down?
Yes, I definitely want chili flakes. Parmesan.
Let's see.
I like it spicy.
Yeah, I think mine is looking nice.
So me and cheese.
Yeah, exactly.
What's this?
Exactly. I'm winning.
Spicy. So the total offers for you So what would you say, guys, is like the recipe to success? Because I know that I want to talk a little bit more about how you guys started out, which I will do. But what, according to you, is like the recipe for success?
So for me, I think I call something called 3 Ps. I think for anything, the starting point really is passion, right?
Yes.
But if you have passion, you need to persevere. So perseverance is extremely.
Some vegetables are adding some stock in it.
And the last thing that's really important for me is positivity. Little bit. And I learned.
Really, passion, perseverance, positivity. That's the ingredients for success.
Right.
Okay. What about you, Vinny?
And I agree with this cheese a lot. So for me, it's been just persistent.
How do I put it like this?
For like 15 years, I've been a founder and had a lot of failures. But I think the only thing that failures are not fatal. So if you just hang in there,
That's our
keep
quote.
showing up.
Failures are not failures.
Yes, keep showing up. And I think if you have to build something for decades, you have to enjoy what you're doing. So it also comes back to, being passionate about what you do. So I think, as long as you have love for your customers and patience, in India, the opportunity in the market is so big and so fast growing and so versatile that I think anyone can really build something great.
That one person in your life who has egged you on to dream big, to be more passionate and go for your goals, and who would that be?
Yeah, I think there have been a lot of people because, I realized early on that women grew up not projecting their ambitions a lot. They hide their ambitions in the closet because we get judged for sounding too ambitious, right?
Yeah.
So I realized very early on that compared to like my male counterparts, I always set a lower bar for how big my ambition could be. And I think my co-founder, who's also my husband Kaushik, as well as my dad, have always pushed me to believe in myself. And there was a point where I thought that probably entrepreneurship is not for me 5 years into it. And I thought maybe I should just go take up a job. And I remember, my dad telling me that, if you want to build something great, you need to be patient and you need to give it decades. You can't build something great in a day. Just if you have the ability to stay the course for like 10 years, 20 years, you can make it happen. So somehow found the courage to keep going.
So what would be that one person for you that really egged you on? Did you
Look, I've had such a long journey, right?
Yeah.
It's been 30 years.
Started in the 7th grade, I think.
No, I was 7 years old. So even
You were 7 years old.
when I got into gaming.
Wow.
Okay. Wow.
You've been gaming since you were 7?
Absolutely. Yeah, I was coding games when I was 7. So starting with my dad,
And suddenly, like, the elder son is 8 years old. Should he also be coding or not?
Absolutely.
Oh my God.
He should be gaming.
Oh.
So starting with my dad, who introduced me to the ZX Spectrum, which really became my passion, right? To my family, my mom, my wife, my sister. Of course, family is always there to support you.
Yeah.
I've had great mentors in my life. My own grandfather was a very eminent cardiologist, Dr. V.K. Goel.
Oh, damn.
The big bull, Mr. Rakesh Jhunjhunwala, and my mentor, Shami Kapoor, the actor.
Oh, wow.
All of them, right?
Your mentor was Shami Kapoor?
Yeah, absolutely, for such a long time.